that. So thank you guys for joining us today. My name is Jefferson Ortiz, here with my partner John Ortiz and with Juan. We help investors invest passively in large apartment buildings in the Sunbelt region. Yeah, and then anything you want to add, John?
Yep, I'm partners with Jeff, and yeah, we're really excited to present this amazing opportunity, and yeah, hope to have you guys on board.
Go ahead, Juan.
Hi, everybody. Thank you for joining. I'm Juan Cruz. I'm of Florida, and yeah, as Jeff and John said, we're here just to present this awesome opportunity, and we help investors invest passively in multifamily properties.
Thank you for that, Juan. We'll get started right away.
And here we're just going to go over a quick basic disclaimer. If you do not know us, this is more of a educational presentation. So if you'd like to learn more on how to be involved, you can always reach out to us and schedule a call. No information provided on this presentation shall constitute an offer to sell or solicitate an offer to make an investment in any securities ownership interest in Savannah 176 LLC.
Awesome. Thank you for that, John. So first, we want to start by letting folks know that we are already 60% funded, and we only just started raising capital about a week and a half to 2 weeks ago. So spots are filling up, wires are coming in. The deal will probably be funded the next week to week and a half. So very limited spots, and yeah, we're definitely getting a lot of good positive feedback from our investors, and this definitely goes to show you the type of deal that this is.
Can I ask a question, or do we have to wait till the end?
So if you want, you can. We do usually take questions at the end, but you can. I mean, yeah, you can ask right now. No problem.
So how quickly do your projects typically get funded? But how quickly do they typically get funded?
So I guess it would depend on the amount of money that we're raising, but typically I'd say between 3 to 4 weeks. We've had projects as much as 5 weeks, but yeah, I say between 4 to 5 weeks is typically.
Yeah, that's usually the timeline. Yeah.
Just it also depend on the deal. There is awesome deals like this one that everybody wants to jump on, and there is some others that, depending on the location or whatever, people might be hesitant. But yeah, 4 to 5 weeks.
Depending on the loan as well, the kind of loan that you're getting, right? So yeah, let me know if that isn't the question, and we'll just continue here. So here we're going to be talking about the team's track record for this particular project. So just combined between all the partners here, we have combined 50 years of collective real estate experience and a track record of success across various industries ranging from hospitality, technology, government, and small business and finance. And our team consists of Jonathan Wells, who is involved in the day-to-day asset management of the projects, alongside Sam Wells, who is involved with the asset management as well as relationship with brokers, so bringing in new relations with brokers. David Eagley, who is a dentist by trade, but is also the one that helps with sponsoring a lot of these loans alongside all of our partners. And as you guys know, Juan Cruz, he is a managing partner and also is a head of underwriting department and investor relationships. And then myself, Jeff, and John Ortiz. And we are involved with the asset management and raising equity for this deal. So just a little bit of background on everybody. Now, the team's track record is 19 plus deals completed till date, 5 full cycle deals. And full cycle just means that we bought the property, we've executed our business plan, we sold and or refinanced. That's what the full cycle means. The units under management is 2,486. Total assets under management, $120 million. $250 million total transactions. That's both acquiring and selling assets. And then the assets owned are in North Carolina, South Carolina, Georgia, Florida, Pennsylvania, Kentucky, and Ohio.
All right, so now we're going to talk about location. As everybody knows, in real estate and almost any other investment, location is very important. This is located in Savannah, Georgia, a very nice city to be. Everybody wants to invest in the Sunbelt region. And the next couple of slides, we're going to talk about it. Population is 393 plus thousand. That's in 2022, and it keeps growing. It's the number 2 southern best city to live in from Southern Living. The number 1 best places to live and work as a movie maker. So there's a lot of different industries in this city. One of these is the movie maker industry. Number 1 best city for creative professionals. #1 most logistical friendly city in the nation. And it has a really good cost of living compared to other big metropolitan areas. And it has key industries in logistics, manufacturing, healthcare, education. And the growing sectors are tourism, hospitality, film and TV productions, and transportation. Go to the next slide.
Right here, we're going to be talking about some of the abundance of opportunities that happen in Savannah, Georgia, and the importance of diversification in the market that you're investing in. So Savannah's population growth is about 4.5%. Georgia's job growth is 3.2%. And the Savannah is the economic focal point in the South Georgia and one of the fastest growing, strongest economic centers in the state. A hub on international trade, booming tourism, and Savannah's boost. So it's flooring with Coastal, the largest U.S. Army base east of the economic driven by the Mississippi River, and Fort Stewart, Bryan County, strong manufacturing sector, booming tourism, as we mentioned, and the largest U.S. Army base east out of the Mississippi River. And some of the places, so you've got here education, government and military, healthcare, logistics, and manufacturing.
Yeah, and so one thing I wanted to add to this is that Savannah, Georgia is actually the headquarters of Gulfstream Jets. That is originally where they are from. So I just wanted to add that to the presentation. Go ahead, Juan.
Yeah, so this is a overview of the downtown Savannah, River Street, where like tourism happens and everybody wants to go take a walk there. It's a really nice area to go if you guys have the opportunity to visit. I really recommend it. The property is about 8 miles from River Street, and that also shows that it's a really good location. Our tenants will be able to do a quick drive and be in the center of where everything is happening, all the different markets and places that they can go, national brands, like we could see here, all the different brands and that we know.
Yeah, and we were down in Savannah for this for the due diligence of this asset, and we got a chance to see all the development that has happened along the planned riverside. There's massive, large apartment complex and condos that are being built along the riverside. So just tremendous to see that kind of growth happening in this market. And yeah, one thing that we like about Starbucks is that when we see two Starbucks in such a close proximity, it tells us how much, because Starbucks does a lot of due diligence before they put any Starbucks office anywhere. So when we see that, it shows us that they've done their due diligence and this market is bound to grow.
And when we're down there talking to the locals, they mentioned a lot of people moving down from Chicago, New York, and out east. So population growth is tremendous in Savannah, which is always good when you're doing multifamily.
Yeah, it's awesome. And I also want to add all those new developments, new apartment buildings, that also help us because whenever they come to market, their rents are going to be higher and they're going to help push the rents higher for the whole market. So that's also a good thing.
Good point there, Juan. Okay, here we're just going to be talking about Savannah's explosive growth in the last couple of years and the projected years. So on the right side here, we see the MSA population growth. So between 2000 and 2015, it grew by 30% and is expected to grow another 30%. We're going to be talking about the outmatched job generator, which is in a mid-sized city like Savannah. Explosive population growth spurred in many manufacturing jobs, including the Hyundai EV plant, which will be including around 8,000 jobs, which is the largest economic development project in Georgia history. And we'll be talking a little bit more about that in a couple more slides. A couple of population facts here have increased by 30% since 2000. The MSA population is projected to expand by another 30,000. Migration from other parts of the country accounts for 50% of that annual growth, including 60K additional tourist daytime population, 116K new residents projected between 2015 and 2030. And some of Savannah's major drivers are the ports, which again is one of the largest container exports in the country, a logistics distribution hub, Aerospace, as Jeff has mentioned, and a U.S. Army headquarters that provides around $5 billion of impact to the economy of Savannah.
Thank you, John. Okay, so as John mentioned, we're going to be talking about Georgia's largest economic development. This is something that we're very, very excited about. And when we were down in Savannah, we were talking to all the locals, and they were telling us how excited they are for this and how much jobs this is going to be producing. So basically, what it is they broke ground at the 3,000-acre Bryan County mega site along the I-16 that will be home to the new Hyundai Motor Group electric vehicle plant. This EV manufacturing operations will be the largest economic development project in Georgia's history. It's a $5.5 billion investment that will bring over 8,100 jobs to the area, and an additional $1 billion expected investment for future suppliers. So this is just right on the outskirts of Savannah. So this is going to bring over 8,000 jobs to the marketplace, and over $1 billion of expected investments for future suppliers. So very, very excited to see that. As you guys know, where the jobs are, the people go. So this is very exciting to see. This is going to bring even more people to the Savannah market. So very, very excited about this. So the factory will electric Hyundai, Kia, Genesis models will roll off the assembly line. It's expected to open in 2025, so in about 2 years. So this is just perfect for our project here. It is going to produce about 300,000 battery-powered vehicles annually in its first phase. With the influx of new workers Hyundai is bringing into the area, commercial property developers and service industry businesses are making plans to the Hyundai impact. So very, very exciting news here. And again, that's going to be in 2 years that is to be completed. So it just works out perfectly with our business plan here. Now here, some of the direct impact of the EV plan, right? So since Hyundai is groundbreaking of the largest economic development project in Georgia's history, additional supplier growth has spurred in the Bryan and Bullock counties, including auto part makers and major Hyundai supplier, Kumar Brands, a global apparel company that will create 294 new jobs, and invest over 87 million in new manufacturing distribution facility. The firearm aviation manufacturer Norma Precision Inc. will create 600 jobs and invest 60 million in a new manufacturing assembly and distribution facility. And I didn't mention the auto parts that is going to be creating more than 600 jobs and investments of 317 million. So these are all very exciting factors for this project, because this is all in the Savannah and surrounding market. So it's just going to bring a lot more jobs to the marketplace, especially the kind of jobs that we want our tenants to have.
And here we're going to be talking about the River Street, which is very popular area in Savannah, and a very multi sort of entertainment district here. So what used to be warehouses has been converted into antique shops, distillery boutiques, spectacular galleries, queen brew pubs, and fabulous restaurants, unique nightlife, and elegant inns and hotels full of hospitality. And me and Jeff were down there, and it was truly great to see. River Street had some amazing restaurants. They're also very known for St. Patrick's Day Festival. So a lot of people gather downtown, and thousands of people just get together for that festival. It's a common thing there in Savannah. And you got Savannah Riverboat right there on the right side, which takes every hour to tourists. That takes them around alongside the river just to get a better sightseeing of Savannah there during the sunset, which is pretty cool to see.
Awesome. Yeah, this brings a lot of tourism to the marketplace, which again is something that we definitely want to happen in our marketplace here. Okay, so now we're going to be talking about the property and some property details here. So the address of the property, 10612 Abercorn Street in Savannah, Georgia, built in 1974, which is great. We always look for buildings 1970 and newer, as they're easier to sell once we execute our business plan. 176 unit. The average occupancy is 96% over 14 acres. And then this is something that really stood out to us from this specific project. Their one bedroom mix here is 56 one bedrooms. So again, no bachelor units, all 56 one bedrooms, 88 two bedrooms. And then something very unique that not any other asset in the surrounding market had is 32 three bedrooms. So that is 32 three bedrooms, my apologies. Which is something that nobody else in the market has. So that is going to be something that makes it very unique. And as you guys know, with people working from home. That is something that has become really popular. A lot of demand for the 3-bedroom, 2-bath. So that's really exciting. Now, what are some of the feature and amenities that we have here is a pool and on-site management, on-site maintenance, fitness center, laundry facilities, and playground. And yeah, it just goes to show you, and some of the other asset classes, some of the other assets nearby don't have any of these amenities. So it makes us stand out from the competition, both on the unit mix and some of the amenities that we have here.
Yeah, and it's good to mention the two adjacent assets are owned by the same teams. So we already know what are the rents that we're getting. We already know what contractors we're going to be using to fix the units that we're going to be fixing, and all that is already ironed out, and we have all the information. We know the rents that we're projecting are very feasible. Even our projections are very conservative from what we can get. And this is more on the unit breakdown. As Jeff said, we have 88 2-bedrooms, 1-bath, which is half of it, and then 56 1-1s and 32 3-2s, which nobody else in the market or around this area has 3-bedroom, 2-baths. We don't have competition there. These are the current average rent. So the average rent is just taking out all the current leased apartments, and we average out what it is. So that's why you could see at the bottom we're saying the real current rents that we're getting is 103 to 476 higher than the average, because when you take the average, you're taking the ones that signed contracts a year ago. But the ones that we're signing now, they're very close to our target average rents, and sometimes we've been hitting those already. You can go to the next slide.
Yeah, so yeah, for sure. So just wanted to add to this. So as this is kind of where we see one of the major value adds in this property. As you can see, the average 1-bedrooms are going at 1,000, but we can get an average of 1,350. So that's a huge value add for these units. Same thing with the 2-bedroom. You know, you can see the current average rates at 1,200, but we could get 1,500. That's over $300 of additional revenue per unit, which is huge when it comes to the multifamily space. And the lastly, the 3-bedroom, which is 1,431, and we're getting 17, or we could potentially get 1,700, and something that nobody else has in the marketplace. So that's a big portion of where we see the value out of this deal. So to add that.
All right, so we're going to talk about the capex, or the money that we're going to put into the property to create that value and be able to get the rents that we're projecting. We're going to be putting into the property $1,452,000. That's going to be divided between exterior painting, interior renovations, landscaping, pool furniture, new signs, patio furniture, a dog park, and then we have a set-aside contingency in case something is more expensive than what we thought. When you see the interior renovations, we're not going to have to renovate every single unit. After the walkthrough, we estimated that about half of the units are going to be renovated, and we're going to be putting about $6,000 on each of those units. The main thing that we're going to be doing for those is the floor. So we're going to be putting LTV floors. And besides that, we're going to be painting the cabinets white, maybe replacing some doors of the cabinets if they're in bad shape. And also doing light fixtures and plumbing fixtures just to make everything look better. And we don't need to replace the appliances. All the apartments have already black appliances, which is a standard for this market, and we don't need to go ahead and update those. So we're good with that. The pool furniture, $30,000. What we're trying to do here is make the furniture look better, look more modern, and more like kind of give it a resort style feeling. New signs, so we can modernize also the property and have the attention of the people just going through and being able to see the property signage. There is some patios that we have around the property, and we want to put some furniture there so that the tenants can use those areas in a better way, and add a dog park. And that's because when we add dog parks, then we can introduce the pet rent and the pet application fee. and those are gonna just go into our income, and that's part of the value add that we're gonna be doing. And as I say, the contingency, just we always want to have contingencies in case something is more expensive than we expected. We can go to the next one. This is the financing side of the deal, which is one of the main things and one of the more attractive things of the deal. Besides the location and all that, the financing, it's what it makes this deal happen, and it's what's making this such a good deal. So we're purchasing the property for 27.5 million. We're gonna get a loan to value of about 70%, and that's because we're assuming the current loan on the property. The interest rate is 4.64%. That's unheard of right now, and the reason why we can get that is because we're assuming an existing loan. We have up to 9 years interest only left on the loan. Our plan is to do it in 5 years. That's why it says 5 years there. And the loan term says 5 years because we're planning to, our business plan is up to 5 years. That's the only reason why. So the loan amount is 19,195,000, and the down payment we put in on the property is 8,305,000. And now we have operating reserves. All these deals that we do with multifamily or any investors, you have to have operational reserves. If something happens and you need to be able to pay the operations of the property, so we have I think it's more than 6 months, including all the operations and mortgage payments. So even if we don't receive any money from the property, which is not going to happen because it's already rented, we have enough reserves. And this is why some people are getting into trouble right now, because they didn't collect reserves, and they're being forced to sell the properties because they cannot withstand interest rates going up or any kind of issue, like taxes going up or insurance it's going up more than expected. And if they don't have the reserves enough to cover those things, that's when people get in trouble. And that's something we really emphasize, to make sure we have more than enough reserves to withstand any kind of issue, problem, or anything unexpected. This is the 5-year underwriting. So basically it's breaking down each year how much money we're going to be collecting from rent, from leases, from concessions or pet rents or whatever, that we can get income from, as well as the expenses, the operational expenses like payroll, contract services, repairs and maintenance, utilities, the turnover of the units, marketing. So it's just breaking it down year by year. As you could see on this one, I just want to call the attention to the insurance. We're estimating on what we underwrote the deal for $1,000 per unit per year in insurance. We got the quote, and we're going to be paying $400 per unit per year. So that is amazing, and all that money just goes back to our investors in returns. So that's awesome. And yeah, that's about it on this.
Yeah, I guess it's something that I wanted to add on top of the insurance being $400 instead of $1,000 is huge for investors. But then the thing I wanted to draw attention is the net operating income of the year 1, year 2, year 3, year 4, and year 5. As you folks might know, that's how buildings and apartment buildings are valued, is based on the income. So anytime that we can increase the income is a tremendous value to the building itself. So I just wanted to point that out. As you can see, first year is 1.4, year 2 we're projecting 1.9. By year 5 we're collecting close to 2.2 million in net operating income, which is huge for an apartment building. Just wanted to add that.
Yeah, and also, now that you mentioned that, I want to call the attention to operating expenses, because it is known that you could just play with those numbers, and it is obvious that the operating expenses are either going to stay the same or go up just as inflation goes up, right? And you can see there that we're not saying that our expenses are going down. In fact, they're going up on our underwriting, but our income is still growing faster than our expenses due to the value add that we're doing.
Great point. Good point. Okay, so now what most investors that came here want to know about, which is the projected returns and what does it look like? So in this slide, you guys may be able to see is what are projected returns. So we are projecting a 20.1% AAR, average annual return, a 8.5% average cash on cash. So that again is an 8.5% average cash on cash, a 16.7% internal rate of return, and we're doing an 8% preferred return, and then a 2.x multiplier. And we'll go over the slide, what this looks like from an investment perspective and what the returns will look like. But this is tremendous. Like this is really, really good returns that we have not seen after underwriting how many deals, 150 to 200 deals?
Oh, over 200 deals just to get one that works like this. Yeah, so yeah, we go through a lot of deals. It's hard to get those numbers.
So here one will break down what at 100,000 investment will look like in terms of returns and whatnot. So go ahead, Juan.
Yeah, so that just like Jeff said, this is a breakdown year by year of how much money you're gonna be getting in returns when you invest $100,000. It's pretty simple. You see the year on the left, the percentage of the return that you're gonna get for that year, and then the money that you're getting on, and then on the blue or the lower right corner in year 5, when we sell, you get that extra money as well. You see the beginning years, first year is going to be about 5% return, and then after that it's going to be above 8. It's going to, by year 4 you're close to 10%. By year 5 we're already at 10%. When you average that, that's when you get the 8.5% cash on cash return. And yeah, by year 5 you double your money, more than double your money, and that's what's happening here. Now I do want to call the attention, besides this, we do a cost segregation and bonus appreciation on the taxes. So you're not going to be, each year that you make this money, we do monthly distributions. At the end of the year, you're going to get a paper loss, which whenever you go to your tax prepare, it's going to offset any income, and you're not going to have to pay taxes on those.
Good point. Yeah, and then I guess the other thing I wanted to mention, or rather ask one, is these returns are based on $1,000 insurance per unit. Is that correct?
Yeah. So now that we're going to be getting $400 per unit insurance, then it's going to be better than this. So, yeah.
And I just want to add a great cash flow opportunity. I mean, just $42,000 just based on, straight dividends. So great cash on cash opportunity here. As usually it's, a lot less than that.
5,
yeah, especially with today's interest rates.
Good point.
Yeah.
Okay, so John will go ahead.
All right, so here we're just going to be talking about sources and the uses of cash. So the purchase price is $27.5 million. And on the left side, we have the sources of cash, which is loan amount $19.1 million. The LP or limited partner capital is $12.2 million, which is a total raise. And on the right side, we have the uses of cash. So what we're going to be using the cash for. So purchase price, again, 27.5. Closing cost is around $631,000. Acquisition fee, $962,000. Operating reserves, $892,000. And the CapEx budget is $1.4 million, giving a total amount of $31.4 million.
Thank you for that, John. So in here, we're going to be talking about management services and what we do for you. So the first thing we can think of here is due diligence. As we mentioned earlier, we were down in Savannah for due diligence, going through the inspection, making sure that, we walked all the units, make sure that everything was as promised, which it was. And the inspection actually came back a lot better than we expected it. So what are we doing? Due diligence. Management has completed all the due diligence required to analyze and make a decision to acquire this property. Prospective investors are encouraged to review this information and may also conduct some of their own investigation if they choose to do so. Second thing we can think here is management updates. Management will send out quarterly reports to investors detailing any work and improvements being carried out in financial statements for that period. Site visits. Management will review on-site management and operations monthly or as needed and report to the members if there are any concerns. A detailed annual report at the end of the fiscal year will be provided. Now, something that we do sometimes during due diligence, we also like to encourage our investors to actually come to due diligence with us. They can walk the property, they can see what exactly it is that they're investing in. So we do encourage any investors to do that as well. Lastly, management. We will be operating the property on a day-to-day basis and working to implement our value-add strategy to achieve our financial goals. Our team is extremely efficient and are highly regarded as having decades of experience in multifamily management, with an emphasis on property stabilization, situation, and capital improvements. We actually did get a chance to meet the property management, and these guys have been in the game for a while. Very, very well put team together here. Beyond the ordinary, now on top of all this, what we have for this particular deal is an in-house property management team. So superior execution, having property management in-house with Lake City Property Management allows for better execution in real-time adjustments and swift responses to issues, enhancing probability and long-term asset values for investors. So if you guys may know, that's actually one of the number one or two biggest issues with syndicators or with operators, is that they source the property management to a third-party company. And in our business model, which is value add, you cannot do that. You have to have it in-house so that everybody can be on the same page when it comes to repositioning these assets. Like Juan mentioned, cost integration. We maximize the use of depreciation by doing a higher cost integration study. And then lastly, specialty tax advisors. We use specialists that deeply understand how real estate transactions work. They work with us, the seller, and local authorities to make sure we do not pay any unnecessary increases. And then, yeah, if you just want to let them how to get started with this.
Absolutely. So we have a very streamlined process, very user-friendly to use. You request access to the investor portal from one of the GP partners. However, you got invited to this presentation that can guide you through that process. You create a profile in the investor portal. You review the syndication documents and consult with an advisor as needed. You read and sign the subscription agreement and wire the funds provided with the instructions in the investor portal. So very quickly, an easy system to use. We use it ourselves and along with our investors. So if you do have any questions, we're always there to walk you through or answer any questions that you may have.
Awesome. Thank you for that, Jack. And the last thing, we just wanted to add this chart in here. As you guys may be familiar, we are in Canada, so we do have a lot of Canadian investors that may want to invest with us. And this is the structure in which they will invest with us. We're not going to go into depth about this, but if you guys have any questions about this, you guys can connect with us and we can go over that. So we won't spend a whole lot of time on this.
Again, this only applies if you are Canadian and you are on this presentation from our reference. So if you're American, this does not apply to you.
That's what we'll spend much time on. That's pretty much it. One thing I wanted to add to this is that we, the GP team, are investing alongside the partners and alongside our partners. And, you know, we believe in this deal and we want to get the returns as well. So just want to add that. And yeah, that's pretty much it. Anything, John or Juan, you guys want to add? Thank you guys for sticking with us in the presentation.
Yeah, no, just want to say thank you to everybody. If anybody has questions, please go ahead and ask the questions.
Yeah, you guys can just mute yourself and you can just ask the question. I can check Zoom in case there's any questions here. Let's see here. No questions.
Yeah, no, the chat is, I haven't seen anything on the chat.
Okay, so
I have a couple of questions.
Okay, go ahead.
One of the things that you said is that the two adjacent assets are owned by the same teams. I'm assuming what you meant is the properties adjacent to the one you guys are looking to buy. Are all three properties owned by the same company and they're selling one of them, or what's the situation?
No, our partners, Iggy, Sam, and John, they just closed on the properties adjacent to this one, and then the other one they own as well. I think Jeff and John went through the properties, right?
Yeah, we got a chance to walk the property in front of it and the one 5 minutes away, and I can confidently tell you that this asset has the most amenities and is the better asset, and they're still able to collect the rents, which we went over them. So that's why we feel very confident, because we already have a proof concept.
Yeah, they're actually collecting, their performa is above projections. So yeah, this is probably the best bones with, again, amenities, unit mix, and on-site and everything like that.
So you're saying that the rents that you guys are offering are put on the presentation are actually conservative and probably lower than what you'll actually get?
Yeah, yeah, because the property in front is getting those, and they don't have the amenities that we do. But we like to be conservative, under promise or over deliver.
Okay.
Yeah, good question. Any other questions that you guys can think of?
No, me.
Awesome. Yeah, like I said, we went through hundreds of deals to find this one. So, you know, when we found it, you know, we put it together with the team and we said, this deal makes sense. We've looked at a lot of deals and then we did the physical due diligence, which means we actually went to the market, went near the property, talked to the locals, and Savannah is growing at a very rapid pace. And all this Hyundai plans and everything that's going on in the market is just going to increase the speed at which it's growing.
That's
I think,
awesome.
go ahead.
No, that's awesome. And the way that you guys did the presentation is incredible. How long have you been doing this for, Jonathan, right? I gotta get my glasses, I'm sorry.
No worries, no worries. Yeah, so Jefferson and John, yeah, so we ourselves been doing multifamily for the last 3 years, like larger syndications, I'd say for the last 1.5 to 2 years. But then our team that we're working on, because this obviously multifamily is a team sport, they've been doing it for a lot longer and they've very significant track record with repositioning. And so that gives us a lot of confidence as well. Anything, Juan, you want to add? Juan might be different.
Yeah, it's basically the same. I've been doing multifamily for almost 2 years now. Before that, I was doing single family. And yeah, as Jeff said, this is a team sport, and we are lucky to partner up with our partners. And yeah, because they have a really good track record. They know the market. They already own properties in the market, and they have been able to deliver. So we're very confident in our team.
That's awesome. It seems like it's a great location, great project. I really like it. And they always say that if there is a Starbucks around, it must be a good neighborhood.
Yeah, they do a little research before they go into a market. So
That's
yeah.
awesome.
Yeah, it's actually 2 Starbucks so close to each other.
Yeah, and we actually were there at the leasing office, and yeah, it's very well put together. The pool and everything like that. We're just gonna, give it a really nice facelift and be able to drive the value not just through the net operating income, but also through force appreciation as well.
Well, that makes an interesting point. The Starbucks were in downtown, so my question is, how close is the nearest Starbucks from this place? And number 2, how close is the nearest Wingstop? Because that's going to give me a little bit of information on how this neighborhood is.
So the Wingstop, I would have to, I guess, confirm that. We can confirm that.
There's a Wendy's and a Walmart just literally down the street.
Yeah.
But I think the nearest Starbucks, like how far this property is located from downtown Savannah, is around, I believe 14, 15 miles.
I do have one last question, and that was when you guys initially put up the information, you put down the 6 the slide that you had the six main principles, the 3 of you guys and the other 3 people. On that slide, it said that there you have like 50, this one. You have 50 years of collective real estate experience, and then you say 19 plus deals completed to date. Is the 19 plus deals the 6 of you guys together, or are the 19 plus deals, adding all of you guys? Does that question make sense? Or am I asking? Do you understand what I'm asking?
Yeah, of course. And yeah, it's between all 6 of us. So me and Jeff are GPs on another asset in Charleston, and with Jonathan and Sam and David, they've also completed other deals. So it's collectively as a team.
Okay, so like for each one of you guys, you just added them all up. But if you use the same project, you're not double counting or triple counting that, right?
You got it.
Okay, makes sense.
No, those are great questions. I appreciate you guys being active and asking. Those have been some really good questions. But yeah, that's pretty much it. So if you guys don't have any other questions, we will wrap it up. And again, if you guys are interested, if you guys came here to Juan, then reach out to Juan. If you guys came through us, then
I will.
And yeah, we're very excited, and hopefully we have some of you guys on board, and yeah, we should be funded soon, hopefully. So I don't know how long it's going to be available.
So last question I have,
Yes.
when is the deadline to collect last investment?
So as we said, we're 60% funded right now. It's first come, first serve. So if your wire comes in, if you're the last wire, then you're the last one until we
But
get the.
Like, I want to know when is the date that you guys have already.
We're closing in mid-October, but we're probably gonna get the money. We're probably gonna get the money that we need in the next week or so. I'm thinking from what it looks like we're getting.
Yeah, I was gonna say by the end of the month, but we'll see how maybe the 20. I'd say give it another like 2 weeks, week and a half. Well, how things are happening, like we didn't.
Yeah, like
we didn't expect it to get.
Yeah, and we have more scheduled calls this week.
Yeah.
So I mean, it could be 2 weeks, it could be 3 weeks, but yeah, this deal is one of the better deals that we've come across for sure.
Yeah. That is why it's just selling it by itself. You guys don't even need to sell it.
I didn't expect to raise $8 in what, a week and a half, 2 weeks. So
Yeah.
Wow, congratulations. Wow, that's awesome. Awesome.
Thank you so much. Well, yeah, that's pretty much it. So again, thank you guys for joining this call today. Thank you guys, and yeah, just reach out to Juan or ourselves, and we'll be happy to help out and get you guys on this deal.
Great.
You
Thank
guys so
you.
much.
thank you.
Bye-bye.
Bye.
Thank you so much. Take care, everyone. Thanks for joining.